I can accelerate the meaning of pedantic to the new meanings. New heights.
Okay, good afternoon, everyone. Welcome to the Risk and Insurance Committee meeting for Thursday, the 26th of October. Let's begin with apologies. There are none. It's good to see everyone here. No late items, as I understand it. Does anyone have any conflicts that they wish to declare in relation to these particular papers? No, good. So let's turn now to the first recommendation, which is in relation to the minutes of the meeting held on the 1st of September. Sorry, I beg your pardon, the 5th of September. They've been circulated. Does anyone have any comments, questions, or corrections? Okay, no. So we'll take those as having been approved, moved by Councillor Steve and seconded by Councillor Kit. Let's turn now to the next item, which is in relation to the revaluation of the roading and free waters assets on page 13. Brendan, thank you for your paper. The recommendation is that we confirm free waters asset valuation and approve the use of the existing carrying value for roading assets because, as I understand it, the change in value is not material and therefore no need to change.
Yeah.
I guess the most important point is on page 13 at paragraph 4.4. Deloitte's undertaken an audit of the revaluations and they're comfortable with the final results, noting a significant movement in the value of the waters assets, but as we've said previously, a minuscule movement in the value of the roading assets. Okay, does anyone have, before I say that, Brendan, is there anything you'd like to add or elaborate on before we turn to questions from colleagues?
So one apology, there was a slight error in the voting report, our version, not the agenda report, the actual report. The first table, the 2023 data, was actually 2022 data. It reverted back to conversion basically. But the 23 data is further down. It's just that 1.2 in the first one. Both audit and someone else pointed it out to me at the same time. So I fixed that up and sent an issue to new one to auditors, obviously. In terms of the roading, the peer review report that we get back up, Deloitte has a meeting scheduled with them tomorrow just to go through a queries they have on it. So while they're pretty much happy with everything that's there because they're using material, they just want to cover on a final basis. So that's due 12:30 tomorrow, I think, with myself and the money on our team and being there as well. Okay, so we start to those questions. I'm not expecting a whole heap of questions from that. They've kind of gone through us and asked all our questions. Just be considered.
Thanks. Colleagues, questions about the paper?
Chairman, yes, I at the 11th hour sent through questions to Graham Brendan yesterday, which I copied this.
Yeah, thank you.
So I don't know whether you want to talk about those or.
Well, I think it would be useful, Brendan. Have you had a chance to have a look at those questions?
Yes. Just give me a second. The auditors have emailed me. I'm checking the link's correct because it's got Tuesday date on it. So I'll just email it back. Cool. All right. So they should be joining shortly. In terms of Councillor Guthrie's questions, so I've got it here. So in terms of the found assets for rural, Deloitte also raises this question about how many found assets there were. There wasn't a whole heap. There was a few, as we put in the new meters in Carpia, there's a few laterals that we found that we didn't have on our system because obviously, you know, when you're putting in a meter, you got to find where the actual pipe is, and sometimes it went in the right place or there was one existing you didn't know. I think there was about 10 or 12 of those found. It was worth about $10,000, so not a huge amount. So most of the increase in the found assets. So you asked about with the three waters legislation, the reversal of that and the coming of depreciation. Obviously that's something I can't, that's your call to make as members. Yeah, I guess as part of the long-term plan process, that'll be a discussion we'll have.
I guess it'd be fair to say that we don't really know what the National is intending to do at this stage anyway, do we?
Right, the auditors, I meant,
I guess it's some point, intent gets matched by reality. And what they say they're going to do and what they actually do, we will know. And I think it's also, as you rightly say, subject to the outcome of conversations, their coalition partners in any. So it's a great question, but I'm just not sure that we can do anything more than speculate at the moment.
Yeah. I think the point I was raising was just I was a little bit concerned about the impact that it might have on our properties.
I had the same question arising out of 6.1, which was getting around what are the financial implications of a substantial change in the assets. So I think that we should ask that question, and I think at the next meeting the shape, hopefully the future shape of key items such as 3 words will be better known, and maybe we should address that question at this meeting. Thanks.
are they in the meeting room tonight? No, she said, it says they're waiting.
They are not coming up for me to let them in.
Okay. He's saying that they're sitting in the waiting room.
They're on the wrong one. Actually,
Why don't we leave you to kind of organise that, and we'll keep going with kids' questions.
I'll assume that since I had to step out, sorry, I'll assume that one was sorted. In terms of the data confidence levels, so I guess the uncertainty, because you asked a question about what percentage of our life expectancy and depreciated replacement costs for 3-wheeler assets that tend to be uncertain. It's a bit difficult to determine what percentage is uncertain. In terms of the uncertain, when you look at the actual report, page number, I'll say page 19 of the agenda, an uncertain for a C, it says the data is either incomplete and unsupported or extrapolated from a limited sample. We're probably more from the extrapolated from a limited sample because obviously the issue with underground assets is it's very difficult to assess them in terms of your remaining useful lives. Things like stormwater and wastewater, we can put cameras down and obviously run cameras through and see what they look like, but that's telling you what the inside of the pipe looks like. It could be being destroyed from the outside in and we wouldn't know because unless you dig everything up. So a lot of it's based on either camera samples, or if we've had to replace a piece of pipe, we might have seen what the pipe looked like there. So it's a limited sample to say that we think the rest of that whole kilometres of pipe, for example, is of similar age. So I guess that's why we've said it's uncertain in terms of that life expectancy. You've also got the issue with a lot of
Sorry to interrupt you, Brendan, but surely their pipes underground is not a new thing.
No.
And there are 89 councils around the country.
Yeah.
Something like that. Presumably over the course of the last 140 years, there's been a way of doing this which has enabled councils who operate at a best practice level to get an assessment as to the state of the quality of the asset. when they're underground.
Possibly. I wouldn't know the answer, but it's an asset management side of it.
I guess like initially those useful lives for underground assets were based on net expectation based on the NAM spending. But you know, in the case of a lot of different materials, when it was put in, they estimated maybe an 80-year life. No council's ever got to the end of that 80-year life yet. So I mean, there was always some uncertainty, you know. So and it depends a lot on soil conditions and a whole heap of other things that people are affected as well. So you know, I guess the you know, particularly the asbestos cement pipe, you know, that the stuff that's uncertain. Brendan, is it? Or?
Yeah, well, it's I guess it's all of it. Because you think like MDPE or MDPE pipes that are going in now, the newer sort of stuff. Again, that's the case where we don't know. They say the manufacturers claim it's going to last 80 years or whatever it is. But
So does the Office of the Auditor General have a view on best practice?
Not that I'm aware of. I haven't looked at it, to be
Isn't
honest.
that material? I mean, when you think about the value of most councils' assets, a lot of it's underground, and therefore, wouldn't you think this would be something the Office of the Auditor General would be interested in?
Possibly, I must admit, I haven't looked to see if they've released anything about it. I mean, Councillor Jeffrey's only sent this,
Sure,
Yeah.
no, that's
Yeah,
not,
so I haven't
that's
had
not
time
in any
to sort
way
of think
intended to
about
be
that.
criticism. I think it's a great question.
yes.
I'm just astounded that after 140 years and who knows how many audits, the Office of the Auditor General doesn't have a view on one of the most important
Yeah.
assets by value of any council.
Yeah, I'm not saying they don't, I'm just saying I haven't looked to see if they do.
Perhaps we could make an
Yep.
inquiry.
Yep.
I think seems to me from a value perspective, it's important enough to just ask the question.
I think generally we've had a pessimistic view as opposed to an optimistic view. So generally we record our asset lives as less than what they will last, you know, and
Which
and-
seems sensible.
Yeah, and often we'll get to the end of the asset life and it still has a lot of life left in it, you know, so we're not going to replace that pipe when they do a physical inspection, they think it's got another 20, 30 years of life.
Yeah.
And so we've shown like in our infrastructure strategy, like a big spike around in 2030, you know, when most of the underground infrastructure in Ōtorohanga was put in, you know, in the 60s and 70s, you know, so we're showing that all that pipe will need replaced. Well, you know, that's probably not going to happen, you know,
Has that been built into the infrastructure strategy?
Yeah.
Definitely the last one, and it's obviously it's not been built into the current one because obviously we're in a situation where legislation is not putting water in.
Fair point,
in the
no,
next
fair
18
point.
months. Depending what happens in that space, then there may be some work to put that back in. Again, that's point or not.
No, that fair point.
Yeah.
This surely must have been based by some of these bigger councils, like in the older cities, like Wellington
Yeah.
and Auckland, because so they would have obviously things in place to be able to look into this. I mean, you look at their infrastructure is old,
Yes.
and a lot of it, and there's been news stories about it how it needed to be replaced.
Yeah.
ASAP, but so they must have surveyed all of this and have a pretty good idea where they're at with it.
Yeah.
So, as far as the Auditor General is concerned, that is mentioned, you know, surely they're involved somewhere along the line.
Yeah, possibly. I guess the other thing we need to consider obviously is best practice might come with some dollars attached, and how much do we want to go from an uncertain to the next one up is.
That is a completely reasonable view.
Yeah.
But my sense would be, surely you start with the baseline.
Yes.
And then every council's got to make its own judgment.
Yeah.
That's what elected representatives is for, to create that balance between perfection and what's possible in the district. So I'm not saying that we should immediately rush towards best practice, but my sense is if we've got a better understanding about what best practice is, we've got a baseline against which management and elected representatives can achieve that balance that's appropriate for the region.
Yeah. No, that's reasonable. I'll
Right.
maybe look at
Thanks.
see if there is any guidance.
I guess.
Great question, Councillor.
Just
One more?
just adding to that, if I may, the concern really, I probably didn't express it too well, was that putting aside the issue of how you actually measure the asset, the condition of the asset, what I was really concerned about was, do we know how much the underground structure is a seed as opposed to the B or another?
Right.
That was the issue, because as you mentioned yourself, Mr. Chairman, there could be an issue of materiality in there. If, for example, just picking a figure out of the year, 50% of the underground infrastructure is a seed, and then we go through and do the exercise, and all of a sudden becomes a B, then what effect does that have on its going forward? So that was the concern really.
That's a good point, and your answer is we don't know.
Yeah, I think if anything, we're over depreciating, not under depreciating. Yeah, we probably it's. Yeah, I couldn't think you would have assets that are going to last less than what we. You know, maybe there is, but I mean, that would. I don't know. That's just my gut.
Yeah, assuming we're using manufacturers' lives, and the manufacturer's lives are correct, then I wouldn't expect it to. I mean, this is the track that we have. That happen. So
Yeah, this next through the chair. As an extension to Kit's question, if we're talking about the uncertainty around the data on our assets, which lead me to page 34, which was the data confidence grading, same thing to see on the life and the depreciation placement costs of bridges. I thought bridges would have been an easy one because they're above ground.
Yeah, so I obviously haven't talked to our asset team about the answer to that question because it wasn't on the original list. I mean, we're talking, I guess the DRC flows out of the life. It's like piece of the calculation being depreciated replacement cost. So that's where that one's come from. I guess in terms of the life expectancy, without talking to someone, you don't, again, a lot of bridges are probably steel. You're just assuming that the steel is in, there's no infections in it that might cause
We
changes.
know that obviously the 50-ton vehicles have changed the life expectancy of a lot of bridges and the usage of those bridges.
Here's a
as
little
well.
someone I prepared a bit earlier.
I guess another thing I should point out with bridges is a lot of bridges are actually culverts as well, just things bridges. Yeah,
So the man who knows about bridges and accents.
You've got accountants trying to answer.
Yeah, that's what you. Mark sent me a little note saying, do you guys need me in there? He must be listening to you're talking about assets. Do you need me in there? I'm like, yes, please.
You said,
Yeah,
Yeah.
he's trying his best.
Sorry, I did miss the beginning of the conversation. I was just listening to the live stream.
So this is around bridges.
Bridges.
Yes, we've put uncertain in terms of our confidence levels in the data we have for life expectancy of bridges.
Right.
So,
Yeah.
so his worship's asking a question, totally understand if the asset's below ground, but surely a bridge is above ground and he should know. And I think Brendan was bravely
Yes.
Stupidly.
You see,
bravely putting his view, which I think
Especially
makes
Syria,
perfect sense to me. That while you may be able to see the bridge, inherent in the bridge's infrastructure may be stuff that you cannot necessarily see true condition of.
So you're talking about the bridge itself or the infrastructure that might be attached to the bridge, like we're not talking about pipes, just bridge.
No.
No, we're talking roading now, so yeah, the bridge.
So the bridges are obviously, they're inspected every year by a consultant that gives us an assessment on them. Currently, we haven't got any bridge replacements sitting in the near future, so they're quite a way out. Which is, I haven't got the AMP in front of me, but apart from general maintenance around decks, things like actual bridge replacements, are quite a few years out. So they're inspected by a structural engineer that obviously highlights any issues. So I'm not sure if that. I would have thought we had a reasonable confidence in our data. Is that I'm not sure where that.
So it's
Well,
bridges
yeah.
labels to see which says data is incomplete or unsupported or extrapolated from a limited
So it
sample.
could be the extrapolated from a limited sample. It could be that whoever's done this has gone and seen 3 bridges, whereas we have 187
Yeah.
or whatever it is.
Yeah, the other question is the structural engineer saying, I think this bridge will last so many more years, or is he just saying it's structurally sound?
No, it's purely an inspection to make sure there's no
Yeah.
issues with it.
Yeah.
So you're talking about the length of the
Life,
life of it.
yeah.
Someone giving you an assessment as to whether it's got 10
So
years.
look,
20
rather
years.
than speculate, I actually think it's a really good question and it does stand out. So perhaps, Mark, this is something you could talk to whoever you need to talk to just get a sense as to whether you are still confirming that there is a C level of uncertainty in relation to the life expectancy of the bridge, or whether on reflection it should be a little higher.
Yeah, we
So
definitely-
perhaps, Kaya, if we could ask Mark to just give us a short report back on that as part of your next report for the next meeting.
So I suppose for me, Mark, in light of heavy vehicles being 10-ton heavier or 6-ton heavier than they used to be, has that changed the life expectancy of these bridges? And is that something that we need to be aware of if we're doing maintenance?
Yeah, so I wasn't the manager back when we did that assessment of heavy vehicles, but we did assess all our bridges and which ones could handle the new weights. I suppose it depends on the redundancy built into that bridge, whether it's going to increase its life. I imagine that data would come out if it was on the border tolerance. So I think from memory, I think we've only got 2, maybe 3 bridges that haven't been certified for that extra weight. But again, I can put far more detail around that in a report rather than sitting here from memory.
Yeah.
Absolutely, that's absolutely fine. I think some really good questions. A very brave response by Brendan. Any more questions?
I think we've covered it.
No, it's very excellent.
Yes,
Thank you.
Cool. Yep.
Okay, anyone else got any questions in relation to the report?
I will stay because these are the rebels, so just.
Oh, yeah.
Yeah, so we've done this one.
Yeah.
Yeah.
Ready to go.
I had a couple of others there, but.
Oh, yes.
Probably
Oh, yeah.
all such time as we know what's
Yeah.
really happening with
About the rates.
the 3 waters.
Yeah.
Point of pursuing those at this stage.
I think that's sensible. Okay, so look, the recommendations that we confirm the 3 waters asset valuations provided and approve the use of the existing carrying value providing assets. Now, Brendan, in light of the comment you've just made that there's still some conversation to take place between the auditors and you, do you still want this passed?
Yes, yeah, because we kind of need to adopt this before we can adopt the annual report. So I'm expecting, and they might jump in and tell me if I'm speaking out of turn here, that when we have our conversation with Becca tomorrow, there's not going to be anything significant. As the 3 waters, we've had that conversation with Becca. I'm pretty sure the 3 waters is all sorted. It's really around the roading.
So how about so why don't we do this?
Mhm.
And Matt, hi, welcome. Welcome to you.
everyone. Thank you.
If we were to pass a resolution that we confirm the asset valuation and approve the use of the existing carrying value, subject to any minor variations that may arise as a result of discussions between the auditors, Brendan and Becca tomorrow, would you be comfortable with that? In other words, I'm really checking with you that you don't anticipate that there will be any material issues and that we're simply passing this resolution subject to any minor adjustments. Is that fair?
That's fair, Peter, and it aligns with our understanding. We've got some points we need to clarify with the value, but we expect they would be minor in nature.
Okay, so thanks, folks. So let's proceed on the basis that the committee confirms the asset valuation and approves the use of the carrying value, subject to any minor adjustments that may arise as a result of the meeting between the auditors, Becca and Brendan. Is everyone happy with that? So that'll be moved by Councillor Prendergast and seconded by Councillor Steve. Great. Okay, so that's been approved. Thank you. Skillfully managed, Councillor.
Yeah. Keep your ear on the live stream though, eh?
Okay. Thanks, Mark. Let's turn now to the annual report adoption. So this is the subject of a paper from Brendan, page 49, and it recommends that it adopt the annual report and sign the associated representation letter. Now, we don't have a copy of the representation letter, do we?
We've got a paper. Is it in front of you?
It was just been given one, haven't we?
Hard copy.
There was one on the agenda. It might be after the annual report document, so I might be waiting.
It was in the original email, and there was a slight amendment of which you had copy.
Okay. All right.
So on
So,
page 187.
so the first point I note at 4.2 of your paper, Brendan, is that there may be a few further changes to be tabled at the meeting. Are there any changes to be tabled at the meeting?
Yes, so there have been a few changes to the final document, or the document, the annual report. The representation there, the only change there is there's a material, not material, an incorrect in the statement that has been put into the back of the letter in the appendix. That's in the paper copy you've got. And that's just some of the adjustments that sort of came through at the last minute. We worked out how much it was, and it's not material, so we're not going to go back and redo the whole document to change that for that figure.
So the changes to the audit, to the annual report, are
Yes.
they material?
Not in terms of dollar values. There's just some presentation type things. One thing we've done on the face of the financial, so on the statement of comprehensive revenue and expenses, we've separated out in the revenue the interest income from being, it was previously included in other income. We've put that as a separate line because
No
it's
change
material
to the
now.
code.
No change to the total. It's just because it's about 470,000 included, accrued for the income that we're going to get from NKC for the loan. We've put that in, so that's obviously bumped up the value of interest income. So we've put that in and then changed the notes to reflect that. There was a couple other changes around the adoption of PBE of SAS 41, which is run around financial instruments. There's just some additional disclosures I need to put into for that. In terms of subsequent events note, there was a bit in there about Three Waters and the reform and the change of government. On reflection and talking to the auditors, we've taken that out completely and said there's no subsequent events. While there has been an election, nothing in that is actually going to impact the annual report that we're presenting. It's all going to be future-based stuff. So there's nothing that we've identified at this point that's a subsequent event that needs to be disclosed in the annual report that may potentially have an impact on what we're presenting. Are there any other significant changes that I'm forgetting?
None of
I
those
think
sounds-
Brendan, you're correct. I think more of those is just around additional disclosure, like reconciliation. And I think this year, from your version and probably to now, I think there's more disclosure around the loan receivables portion. So I think there's quite a fair bit that's being added subsequently. Yeah, the rest is probably just minor, I'd say. Yeah, like numberings, but yeah, casting through. But yep, that's fair.
Yeah, so with the loan receivables, that's just some further disclosures around the Kiwi House loan and the loans, with some more words written around them. What we've used for fair value adjustments on those, the Kiwi House loans with fair value adjusted because it's over a long period of time and with interest-free periods, we discounted the original amounts back to the basically record the fair value currently at a discounted cash flow. So it's basically what it is worth in current dollars, not what it's going to be when we get it back in 2 million.
So we obviously haven't seen those additional changes. I just am sensitive to the fact there are counterparties to these arrangements.
Yeah.
And the annual report is a document in the public sphere.
Yes. Yeah.
You're satisfied that there's nothing in the additions that have been made that would raise concerns by the counterparty in terms of release of confidential information?
No,
Or
no.
commercially sensitive information?
No, I don't believe so. Everything with the Kiwi House was done through open council vendors. So the interest rates, when we've extended the terms, all that sort of stuff has gone through open council vendors. There's nothing there. In terms of NKC, there's nothing in particular in there that I believe causing issues.
Okay, that's helpful. So the auditors haven't sought any material changes to the annual report. And does the report identify any new material risks that the committee hasn't previously discussed?
So I guess the only risk that, and maybe this is probably a good time for Matt to present their report, because they talk about it in there, I guess would be around the loans receivable, probably more so the Kiwi House than NKC, but wonder if now's a good time for you guys to do your report and you can talk to some of that.
Sure. Shall I cover off the loan receivable piece, Brendan, if that's all right?
Yep.
So I think from a risk perspective, when we looked at the loan receivable, and this is, sorry, I don't have the full pack in front of me, but it is under section appendix 1. We've got our observation there, but we've also got it as a key focus area under section 2B, which sits on page 12 of our report. So loan receivable, page 12, Ōtorohanga Kiwi House and NKC development. So with the loans being significant and reasonably unusual in nature, although councils do this in country, it hasn't been something that's frequently occurred in Ōtorohanga. We did place additional focus on reviewing in terms of understanding the rationale for the loans, and then we stepped through and considered the key assumptions and assessments that have been made by council in terms of assessing recoverability and the fair value of those loans. With the Kiwi House loan, for NKC development, that's in sort of the final stages. And when we last caught up with Brendan, resource consents have been issued, and we do expect repayments to be made imminently. If there hasn't been a payment made recently, I suspect it should be made within the next month or so. So from a recoverability perspective on NKC development, we're reasonably comfortable that that loan should be fully recoverable and there shouldn't be any issues with that loan moving forward. That being said, still needs to be a watching brief on that, make sure they meet all the commitments, but don't expect, there's no indicators at the moment that that loan is impaired. With the Kiwi House loan, there's a little bit more consideration that went into, is the loan impaired or not? And it's got a different fact pattern that sits behind why the loan's been provided why the loan's been provided from council to Kiwi House. And importantly, we acknowledge that it's also got a significantly longer repayment profile. And the loan was initially provided at a very different time, which is pre-COVID. And so COVID happened, and that's materially changed the fact pattern that's evolved over that period of time. And it was certainly a risk that was acknowledged by council in providing that loan, and why they consulted with the community. It is at risk that there could be the possibility that Kiwi House may not be able to repay this. We're not saying at this stage that the loan is not recoverable, just saying it was certainly acknowledged by council when they went up for consultation that was a risk that was being assumed when the loan was being provided. When we've looked through the loan this year, and we've done a reasonably detailed deep dive in terms of understanding how Kiwi House is tracking to their budget, and also how their how the future plan may look like in terms of cash flows moving forward. And at this stage, we're reasonably comfortable there's no significant indicators that the loan is impaired. However, it is an area that we believe should be closely monitored by council. And certainly when the loan was set up, there would be requirements, and it initially started that quarterly reporting should be provided by the Kiwi House, and that's since moved to 6 monthly. There's also the ability to appoint a trustee to the Kiwi House to monitor and provide input into the direction of that. And from our perspective, when we looked through it, it wasn't immediately evident that all of those actions had been taken. So we would encourage council to consider and ensure that there is appropriate monitoring of the loan moving forward. We're again not suggesting the loan is impaired, but it will be, if something was to go wrong, it would be in council's and everyone's best interest to make sure we've been fully on top of this and we're comfortable with the direction of travel. No concerns at this stage, but just saying it would be helpful if there was a robust monitoring mechanism, and the processes that have been set up when the loan was established were followed through.
Okay, so just in relation to that, I could just point out to the auditors that the committee only received this a couple of hours ago, and certainly not at any time where we could read the report, let alone digest it. So my suggestion would be that maybe we'll listen to what you have to say, and then perhaps in the time that we've got available with the chief executive, we'll have a conversation about where to from here based on your report, as to the extent that we know what's in it, since we haven't read it.
Just one point of clarification, Matt. It was actually during the height of COVID lockdown when this discussion was taking place. I was standing on the balcony of my own home, talking to Jonathan Salter from Simpson Grierson about the inherent risk our council faced through potentially putting this loan out to the Kiwi House. And that is with the Chief Executive of Local Government New Zealand, Jonathan Salter, and myself, in a conversation, and me expressing my grave concerns about the risk that we were facing as a council for undertaking this loan. So your observations here and having a robust monitoring system around it gives me some, I suppose, peace as well, because we actually need to ensure that this year is monitored closely from my perspective, knowing how vulnerable I felt at that particular during those early discussions. So thank you. Thanks, Kenny. Back to you, Matt.
Thank you. The only other point to call out on the loan was when we looked through the documentation piece, was that we identified that the GST had incorrectly been claimed, and that's Brendan's working through with PwC to remedy that or identify the best course of action to remedy it. We've booked, there'll be a small adjustment, I think, for penalties and interest that sits on the error schedule at the moment. It's reasonably insignificant, but just acknowledging that that's the other part of the Kiwi House loan just to pull through in our areas of audit focus. So
In relation to that GST issue, that GST issue won't imperil the council's ability to fund its normal day-to-day operations?
No, because we've basically had the use of that money when we possibly shouldn't have. This year we're looking at having to borrow quite a significant amount of money to cover most of our capital expenditure that's likely to happen this year anyway. So all it's done is probably delay us that way. So it doesn't significantly change. What we probably saved in interest by not having to take out a loan a bit earlier is probably been offset by the penalty interest we have to pay. So.
And we've made a voluntary disclosure?
Yes, the PwC lodged that with us for us this week, and they'll just come back with go through the process of figuring out how to pay that now. We'll circulate by ID to go through the processes.
And from your perspective, you've got to the bottom of the process issue that must have arisen?
Yes, yeah.
And you're satisfied that the process issue is not something that would happen again?
Yes. And then the event, it was because of the nature of being a loan and what the documentation we were getting through was basically tax invoices. So it was processed through our AP system as if it was a regular property claim tax invoice that GST was claimed on it. I'm hoping there won't be many more loans that council gives out in the future for this to happen again, but if it does, I start now aware of.
Okay.
If that happens, I will make it clear that anything that is loan related, therefore, make sure you be secret.
Anything else, Matt, that you wanted to raise?
Nothing else. I just wondered if the committee would like me to step through the report in a little bit more detail, or if you prefer to take it away, digest it. I can give you a high level overview on different pages if it's helpful to the committee now. But
since I assume none of us have read it, I think a high level overview would be helpful.
Sure. So if it's okay, I might just move back to the start of the report, and firstly just want to acknowledge that the help that's been provided to us through management in terms of where we are at. Last year, a number of councils were delayed, and we only signed off Ōtorohanga District Council in mid-December last year. So it's very pleasing that we're at the back end of October now, and we're positioned to sign off the annual report come early next week. There are still some procedures to be worked through, such as the discussion with Becca, but we're principally there. So I just wanted to acknowledge and say thanks to management for the help provided to us. And audit's never easy, and Brendan, I think each year, there's probably an additional thing added onto the list that we need to work through, but certainly appreciate all the help being provided to us. In terms of status of the audit, we've got it there as 80% complete. It is more advanced than that, and I don't think we will have any issues with signing off next week. It's really just working through the last pieces of that. So on the next page, we talk to materiality and unadjusted differences. So when we initially set up materiality for the council, that was established at 662,000. Subsequently, that has increased to 745,000, and it's based off expenditure. And as expenditure has increased, so when we do the initial assessment, it's based on our best estimate, and then we look back and say what was actual expenditure during the year, and that's the reason why materiality has moved up from that 662,000 to 745,000. Below that, we have what we call a clearly trivial threshold, and that's been set at 37,000. So that basically means any error above $37,000, we've reported back to you if it has not been corrected. And those are those two errors that sit on the error schedule in the representation letter. From a quality and independence perspective, we do no other work outside of the audit and the trustee reporting. So there's nothing there that I need to bring to your attention or anything of concern. The other graphic that we've got on that page is control observations, and I think pleasingly this year we are seeing a reasonable movement in the reoccurring findings or the remediated findings that have come through. So while collectively we have got some work to do between both teams to knock off all of those findings, and some of them may be best observations. It's pleasing to see there are a number of remediated findings that have come through across that graphic. Now I'll just step through in terms of areas of focus and step through those in a little bit more detail. So that's on page 9 of our report.
So Matt, just sorry to interrupt.
Sure.
I'm looking at the areas of focus of audit focus dashboard.
Yes.
I don't have a foggy clue what that means. Can you just take me through it?
Sure. The areas of focus dashboard are really to give you a sense of, and some of this is audit terminology, and apologies, but we do need to provide it to. So the first column we've got, there is a column addressing which of those areas of focus have a significant risk. And a significant risk is every balance or transaction within the financial statements, we're obligated to assign a risk to that. And that's either a lower, higher, or significant risk. Significant risk means that there is a significantly greater opportunity or significantly greater chance of a material misstatement resulting from that area. In terms of audit methodology, revenue and management override of controls are presumed risks. So in every audit that's undertaken, those are presumed risks. So management's ability to override controls is a presumed risk, and it's nothing of concern to Ōtorohanga. It's just audit methodology there. Fair value of infrastructure, based on professional judgment, we've assigned a significant risk to fair value of infrastructure, simply based on the number of assumptions and judgments that drive that. And that tends to be a reasonably consistent approach across entities that are undertaking a fair value assessment of assets, and assets are material to the balance sheet. The next column we have there is fraud risk. And again, this is audit methodology, or the audit standards drive that, and there's a presumed risk of fraud associated with management's ability to override controls. The third column there is level of management judgment required in those different areas. Again, this is a bit of professional judgment that's undertaken by us as auditors. But for example, fair value of infrastructure, there are a number of assumptions that drive those valuations. So we've assigned a higher degree of management judgment to that. There are areas though, like revenue recognition, where the revenue recognition profile of the council is reasonably simple, and the point of recognition is not overly complicated. Some other businesses may be more complicated, but because it's reasonably simple in council, that's been ascribed a lower risk, so a green dot's been ascribed to that. And then the fourth column we have there is really an overview of the findings that have resulted from our work, just a high level overview of those. So in areas where we have no findings, there's a green tick that's been ascribed. In areas that we have a finding or insights have been identified, there's a little magnifying glass, and where there's a finding that may be more material, we've just coloured that red for ease of review. Apologies, I know that's a bit to take in, but hopefully that helps, Peter.
I can certainly see how it helps the auditors. Really helps us, to be perfectly frank, except for the last column. Okay, thank you. Let's move through the areas of audit focus.
The first area of audit focus is the fair value of infrastructure assets. And council has a material asset base, and a number of those assets are carried at fair value. So in the audit, in the year ended 30 June 2022, a valuation of roading, bridges and culverts and 3 waters was undertaken. When we commenced the audit, it was intended that a valuation would be undertaken of those asset classes again. As we worked through that valuation process this year, what has resulted is that the valuation assessment for roading has identified that there's an insignificant change to the valuation of those assets. So management have opted not to push that through as a valuation, and it's been considered a fair value assessment at a high level. The 3 waters have still been adjusted for, and that's resulted in an uplift of those asset classes of circa 3 million. So from an audit perspective, we've done a detailed review of, just to point out too, the valuation process in the current year was slightly different to that adopted in prior year, and that an in-house valuation process was worked through, and that's been peer reviewed by Becca, and you've obviously had a detailed discussion around that prior to this. But we've reviewed those valuations and fair value assessments in detail. We've challenged the assumptions that have been applied in that valuation process and considered the independence of the peer reviewer. In terms of the output from that work we performed, what we identified was some of the factors that had been applied to the roading assets were incorrect in the initial draft. That subsequently been corrected and been adjusted for, but it did result in, well, it would have resulted in a material uplift to the roading assets that has now decreased back, and the indicative movement in roading assets is reasonably insignificant. And ultimately, where we've concluded is that management's position that the fair value of roading assets is not materially different to the carrying value is appropriate, and that the fair value adjustment made for water assets is reasonable.
So let me stop you there. So Brendan, this work that was done initially by your people, then it was peer reviewed by Becca's.
Yes.
My understanding is you got the index right. It was sent to Becca's. They told you got it wrong. You then reworked it. And then someone pointed out that the index that you'd started with was correct.
Yes, there's another element to that, but that was the initial thing. So we, based on what we'd done with Becca last year for the revaluation, we used the same data for the inflation adjusters for this year. We put those through, and that was fine. They came back and said, "Oh, you've got them back to front." So I flipped them around. Then they came back and said, "Sorry, our bad. You were wrong. It's fine." So I back, which added a bit of additional work, obviously, as we rewrite reports, rerun the valuation. Subsequently, then when Deloitte was looking at the roading one, the actual adjuster we'd used for that turned out to be the wrong one. We'd used construction CGPI, I can't remember, capital goods price index, when we should have actually used Waka Kotahi adjusters, which had actually been used by Becca last year, but we hadn't actually picked up that they used different ones. So when we adjusted for using those, that's when the valuation came back down the road.
So the issue I've got, Brendan, I'd just be interested in your comment on this.
Yep.
When we spoke to our friends at Deloitte, started this exercise, I was a bit tough on the fact that we seem to be going through 3 sets of hands, which seemed to me to be a colossal waste of time. But it looks like the auditors have picked up something that our peer reviewer should have picked up with. And so my question then is, rather than kicking Deloitte, you seem remarkably calm about the service provided by your peer review.
Yeah, I guess, I mean, there's two separate peer reviewers, because water and roading and Becca's in the separated two different people. The water side of things, apart from getting the adjusters back to front, which admittedly, had I, rather than just taking the face value and double check,
I'm not blaming you. I mean, there's a reason we have a peer review.
Yes. But I suppose, I could have potentially wanted to do it. But anyway, apart from that, the water side of things went very well. And he was who we dealt with last year for the side of things. The roading side of things was probably a bit more, communication wasn't the greatest, I guess. And so there wasn't feedback. Picked up the issue with using not using the vodka earlier in the process.
Well, maybe this is something we could have a conversation with the chief executive about when we get to that point. Sorry, I interrupted you, Matt. Carry on.
No problem. Thank you. So the next area of focus is management override controls, and that's as I mentioned on the summary slide, it's a presumed risk and it's a significant risk. So under the auditing standards, we're required to do a suite of work. That involves understanding and evaluating the financial reporting process, testing a sample of journal entries that have been made across the entire year based on a set of criteria that we establish. We review accounting estimates for bias or judgment, perform a retrospective review of those estimates, and obtain an understanding of all business rationale for unusual business transactions such as the Kiwi House loan. There are no material issues to report there. We did identify some minor housekeeping points which are outlined in Appendix 1. I will move to the next area of focus, which is revenue recognition. Again, under the auditing standards, there's a presumed risk of fraud in revenue, but based on council's revenue streams, we have rebutted that presumed risk of fraud. But as part of that, a number of councils over years have had issues that have evolved from how they have rated and legislative issues around how those rates have been set. So as a consequence of that, the Auditor General has a strong focus on understanding and ensuring that all councils have appropriately followed the requirements to rate, and it's all follows the letter of the law when rating. So as part of our review of revenue, we've obtained an understanding of the relevant controls. We've assessed the IT environment, completed analytical procedures over those revenue streams, and to address the risk around or the legislative risk, we've walked through a detailed checklist and assessment of how rates have been struck, both for the current year and for the coming financial year, and ensured that there's nothing that's come that we need to bring to your attention as part of that. Just highlighting, it wasn't a legal exercise, but it is a check that we have performed to ensure that there's nothing there that as auditors we should bring to your attention. So no material findings across all of that work. The next area of focus is loan receivables, and we've talked to that already. So I'll just skip through to government reviews and proposals, and I'll just hand you over to Yen, who's going to step you through this next section.
Good afternoon, committee. So I think in the area of audit focus around government review and proposal, as we know, through water reform is, I think, ongoing. And as part of our audit procedures performed, we talk to management in terms of how they consider the impact, and also having close communication with the Office of Auditor General in terms of what's their expectation in terms of what council do. And as part of that is that the expectation is all councils that has 3 water assets will have an emphasis of matter, and which we have that extract in the report. And this is no different to any other district councils that hold 3 water assets, basically to call out the changes and what council is currently doing, still taking 3 water assets at their assets and not considering the future impact from the legislation yet. And then in the next slide on page 14 is around public sector procedures, specific procedures. The Office of Auditor General specifically pull out a couple of areas where they would like us to look at. These are around policy, sensitive expenditure, related party, including managing conflict of interest, and also legislative compliance. As part of our audit, we perform a series of work which we look at whether or not the council remain alert on sensitive expenditure, also understanding the policies that the council have around fraud, and also looking at how council manage conflict of interest and test samples of related party information or transaction that's gone through, and also understanding how council comply with legislation. As part of our work performed, we have not identified any material issue. However, we do have a couple of observations which we included in Appendix 1. On the next one is around ESG and climate change. And this is sort of a interesting topic and a focus topic from the public, and also from the Office of Audit General. So we discussed with management to understand if there is any considerations and impact to the annual report or financial statement in the current financial year. We have not identified any material items to be brought to your attention. On the next slide, which is around statement of service performance, this is an area where council has always had, and this year specifically, there's a new accounting standard that comes out to talk to that, which is PBFRS 48 on service performance reporting. So on that standard that comes out this financial year, which is effective for the council, there are a couple of other requirements on top of what council would have done in the past. So as part of our audit, we understand and evaluate the controls council have around how they monitor the service performance information. We also review the council SSP to the legislative requirement. And as part of our work, we audited a couple of some material performance measures. And also the focus is towards the more significant group of activities like roadings, land transport, water. And as part of that, we also review narrative on commentary to these service performance information that's disclosed in the financial statements. There are some ongoing work still to do on this area, and we're working closely with Brandon to close it off. I think that's more towards the water sort of the bacterial sort of compliance that's currently worked through. The next one on page 16 is also another new accounting standard that comes through this financial year, and it's around the financial instrument, specifically for the council. One of the major impact is around how council account for equity investment. So in the past, the council has always carried this at cost, and with this new standard coming out, the expectation and the standard does require it to be fair value, and it could be either through profit or loss or other comprehensive of income. And for council specifically, the council have elected to go for the fair value through other comprehensive income. And as part of this work performed, we obtain an understanding how council perform their fair value assessment, and management has concluded that the use of adjusted net asset method is reflective of what the fair value of these investment that the council have. And as part of our work, we look at the assumptions and also consider if the fair value has appropriately accounted for in the financial year. So specifically for this one, because of the new standard that comes through this financial year, there's a transitional provision where the council do not need to restate prior period if there's any significant changes. So as part of this exercise, the fair value adjustment that come through on day one when you adopt the new accounting standard is 6.4 million or 6.5 million, which is recorded as part of the opening accumulated funds coming through.
That's primarily the airport asset, is that right?
Yes.
Yeah, primarily the airport, and there was a little bit for LGFA as well.
Right, okay.
And the
So
next
that's something of the assets of the council, but has no other impact.
No, it's balance sheet increases our accumulated funds,
Yeah.
increases the value of the asset. That's
Okay.
That figure there though, the chairman says 6,495,000. But
Is it all?
is it supposed to be
No,
6.4
no.
million or 6.4
Well, it is
thousand?
it's 6,000 when you write it that way.
Oh,
You can write it that way, you could write 6.4 mil. So either way
Ah.
is
6.4 mil.
technically right.
We'll leave you two accountants to have this debate between yourselves. Sorry, carry on, please.
That's all good. The last area of audit focus just around flooding events, which the Office of Auditor General require us to understand. We spoke to Brandon and also the council to understand if there's any implication, as you are aware, that there isn't anything that we need to bring to your attention. So and I'll just hand it back to Matt on the remaining.
Thank you, Ian. So the next section of reports, just internal control findings. I won't step through these in any great detail, but as I mentioned at the start, it's pleasing to see the progress that has been made to address some of the internal control findings over the course of this year. Probably the most material observation was the Kiwi House one that I wanted to bring to your attention. The others may be considered housekeeping in nature, but we will work closely with Brendan and the team to try and address those as where possible over the coming year and continue to improve the control environment. The next slide we have there is a summary of unadjusted differences, and there are 2 unadjusted errors that remain on that, and that's replicated in the representation letter in the appendix that Brendan pointed out earlier. The first one is just the interest on the Kiwi House loan that hasn't been adjusted for because it's reasonably insignificant, and there's a prior year adjustment there to reflect the NKC loan, and it's just a movement between assets and liabilities. So on a no P&L impact or profit and loss impact, but just grosses up the balance sheet side by 282,000. In terms of other reporting matters, which is section 3 of our report, the first slide there just talks to the audit fees, and those are in line with our signed audit proposal. And the next slide talks to accounting policies and changes in accounting policies, and Ian stepped through those already. The 2 key ones being the change in statement of service performance, and the second one being the accounting for financial instruments. There's nothing else significant that's changed during the course of the year. The next point is related parties. No significant related parties have been identified that haven't been disclosed in the financial statements. Representation letter, a copy of the representation letter has been provided, and if that's signed off on the date of adoption, that would be appreciated. And while it's noted there, we haven't reviewed all the other information. I believe we have now seen all the other information included in the annual report. It's been provided to us, and there's no areas of concern in terms of that. Section 4 of our report just talks to upcoming areas of focus. So the first slide there is mentioning accounting standards that are coming into play for the coming year. Pleasingly, there's nothing significant that will come out. There'll be minor changes, but nothing significant I need to talk to or believe I need to talk to you at this stage about. And the next slide is just related to climate and carbon reporting. And that's a very topical area for most businesses at the moment, and certainly a topic of conversation across a number of audit committees. So we've just provided in there as a point of reference for the committee to provide further information. And that last section of our report is the observations and recommendations, which I won't step through at this point in any great detail, but more than happy to circle back and clarify any points the committee would like clarified. Or if you prefer, I can do a step through of each of those.
So just a couple of questions, Matt. Or this may be a question for you, Graham, or for Matt. Does the council have any climate-related mandatory disclosure obligations? In terms of the annual report, you have no mandated disclosures at present. It will be a strong focus area of the long-term plan, and we are expecting that will be a focus area for a number of councils based on the nature of the assets that you hold, that long life assets, and the thinking that needs to go to in terms of, I'm probably putting it too simply, and there are people on the table that know a lot better than me, but long life assets, where do you spend your money? Do you invest now in ABC? But will be a strong focus here. But for the purpose of the annual report, simply there's no additional disclosure that is mandated at this stage. Thank you. And then the second question is in relation to Appendix 1. So as best as I can tell, there are 3 new findings that for which there's been a draft management response. And we'll have a conversation with the Chief Executive after this to finalise council's response in relation to the management letter. And then there are some findings re-raised from last year. And is that, how many pages is that? Because I then go to something called IT control observations. And I don't know what they are. Are they findings re-raised from last year, or are they something different?
Sorry, the IT findings are not overly clear. That those are related to the computer control environment. So IT specific findings that we've raised.
And I think to answer your point, Peter, I think in prior year, the IT findings is slightly different. And this year we do some additional work with Brendan around understanding how the IT environment, if it has improved over the past 3 years, because I think the last IT audit that we had with the council is probably 3 years ago. So this year we got our IT team coming back to have a look again if there's any improvement that's come through. So the IT control observation that's coming through is just on a basic high level understanding and discussing with the client, but not necessarily testing any of the details of so I think that's where the finding that's come out is more so from a high level observation. So they are this year.
Thank you for that explanation. So what I think I'm hearing is that there are 1, 2, 3, 4 pages of findings re-raised from last year, and that that there are some additional observations in relation to IT controls on 3 subsequent pages, but those IT control observations were not findings raised last year.
Yes, that's correct.
All right, excellent, thank you. Now, does anyone have any questions of the auditors before we move on? Brian, you're good? Brendan, you're good?
Yeah, I'm fine.
Tanya? Good? Okay, colleagues, anyone else got anything? Okay, thank you both very much for your presentation. We'll now take some time to have a conversation as a group. We'll probably do that once we've gone to the conversation with CE. So in the meantime, we really appreciate your efforts. Thank you very much.
Thank you, everyone. I appreciate your time. Have a good day.
Thank you.
Okay. All right. So Tanya, I'm conscious of the fact that you may be in the same position as we are in relation to the management's draft responses on stations and recommendations.
I met with Graham and Brendan yesterday about it. So they had completed the management comments, and my question of them is like, it's more around process here. Like, yeah, I guess at what point do I get involved? At what point does the committee get involved? At what point are we all happy with the comments that we've put in this report as a response to our auditors? So that was kind of the nature of the conversation. It's not that I don't support anything that's in here, and I think it's more how do we all get comfortable that these, is there anything we want to really push back on? Because I see some things in here that I think, oh, are we gonna like spend the rest of the year like trying to nail this when really it's so low, the risk is so low, the priority I think is quite low, versus putting all our effort into managing something that actually has quite high risk. Otherwise, in my view, we risk just trying to address everything that's in here when there's weightings, and I know that Brendan and Graham have produced like an implementation plan in the past.
Priority. Like generally our response in the past with management response to the management letter, is that we will look at it, as opposed to like a strong pushback. you know, straight away, just to kind of like, well, let's just kind of see what they're trying to say here, you know, rather than sort of an immediate knee-jerk response, you know, and that's the flavour of the comments that we've put there. That doesn't mean that we can still push back,
Yeah, sure.
you know, so you know, but rather than just push back straight away.
But I think the point the Chief Executive is making is a very good one, which is this issue about diminishing returns.
Yeah.
And this is not in any way being critical, but in the past, I've expected to see the findings and a draft management response for consideration. And I would expect that the committee would test with Chief Executive and her staff about the extent of the management response, because fundamentally it seems to me there are three categories of response open. One is fair point, that's important, we will absolutely deal with this. Second one is okay, we don't think it's important, we'll get on with it at some point, but we don't regard it as critical. And the third point is, we hear you, we just don't agree with you and we're not going to do anything about it because we don't think it's material, or we think that the return in terms of the cost is inadequate relative to what we get out of it. So I'm used to having that debate, which I suspect is the very point that you're trying to make, which is why, and this is not in any way intended to be critical of anyone, I always react incredibly badly, so I apologise, Kai. I react incredibly badly to getting papers on the day, incredibly badly. I think that we do need to have the benefit of conversation with Brendan and Graham and Tanya, where we test about which one of these three categories do these findings fall into. Because then if we do form a view, then Graham and Brendan are able to go back with a strong sense of support, both from the Chief Executive and from the subcommittee in terms of how we deal with recommendations. But with many of these things, it's a bit like the way that Admiral Nelson used to view orders. He used to view orders as in the nature of a suggestion. And I think we've always got to be careful to weigh up what comes from the auditors against what makes sense, what pushes against the law of diminishing returns.
So through Chair, I'm wondering, this is a chicken and egg situation. Do we wait for Brendan, Graham and Billy, because there's quite a lot of IT ones in here, to give us a more fulsome evaluation of each of them around, okay, they've said that we could put this control in place. In order to do that, we probably need to employ another finance staff member. Here's the best we could do in terms of mitigating this risk, and it's by putting this extra process step in place and bringing that back to us, or do we want to do that kind of in the absence of having that information at the moment?
Well,
I feel like it might raise more questions than anything if we just take it like that.
I mean, I'm going to be very interested, Graham, in your view, but here's the concern I've got. Brendan's tried hard to deal with the many issues that have been raised in previous audits. And my recollection from the last paper we had on the subject was that there were 22 outstanding issues, 16 which have been dealt with, and 6 were still a work in progress. The worst thing that we can do is just agree to do a whole lot more. And you ask yourself, to what extent does that help make the boat go faster? Or is it just a checklist ticking exercise? So while that's not adequately answering your question, I guess what I don't want, and I hope colleagues would agree with me, we don't want to create a make-work scheme where we simply agree to everything the auditors have asked for without critically thinking, does this make the boat go faster? So, Tanya, I'm sorry that doesn't answer your question, but I guess given that, and Graham, given what you've heard, do you have a view as to how we might best proceed?
Yeah, I think for this committee, it really comes back down to I guess what your risk appetite is, and I kind of used the example of cybersecurity. You know, we could you know, spend an infinite amount of money and lock our systems down so that they're totally safe, but you know, they'll be unworkable. You know, and often with, and I've dealt with auditors for a number of years. Often, particularly in a small council like this, it becomes a resourcing issue more than anything, you know, and because we only have a limited number of staff, and often auditors will look at it from a sort of a segregation of duties, or you know, to reduce risk. You know, the more people that are involved in the function, the less the risk is. You know, if it's just me and Brendan, then that's a risk. You know, and but what I think's happened here, and it's kind of like in every year, the bar just seems to be getting lifted higher and higher, and processes that they were happy with last year that we were undertaking, they're no longer happy with, you know, and just as an example, you'll see an item there around you know, checking like payroll master file changes, where you know, we've only got so many people within our team, and there's obviously some confidentiality issues there around payroll, and so at the moment I check the master file changes, so it comes to me, but that's no longer good enough. I'm not independent enough. You know, so it would mean that probably, you know, someone that knows nothing about payroll would now have to be involved in the process, you know, and it's almost at the point where it's unworkable, you know, and
it's a perfectly reasonable response. And I guess from my perspective, it may well be that the auditors raise these issues, but I think that it's unhelpful for us to simply say, you know, we agree and we'll get on with it. If the answer is for very good reasons, given the constraints under which your organisation operates, it's just not practical. I need to say that.
I think you know, like, but
that direction, Mr. Chairman, probably needs to come from us to the staff, that we have considered what those issues are, and for the reasons that we've talked about, we don't consider them to be, you know, too on it to continue with. The other thing, of course, that I'd be interested in knowing too, is that of the reoccurring, how many of those were in the previous years? So have they come from not just last year, but the year before? And if that's the case, those are the ones that I'd be interested in sort of having a look at too, as to why they keep coming up every year.
And there's one there that we've talked about with this committee, and that's around the asset additions, you know, and I think that's probably the only recurring one that I'm aware of that's been there.
I mean,
you know?
consumer expenditure is always there, but it's different issues each time. But it's always a recurring one because sensitive expenditure is a big area, obviously. And one person does a purchase order. I mean, last year I think it wasn't so much a purchase order, it was late. Like this year's one is where someone claimed something in April. Last year I think it wasn't signed up by the right person.
Look,
so there's no sort of thing.
I think we are at significant risk of agreeing with each other. And I think we should probably stop right now. I think, Councillor, your point is absolutely spot on. If we are going to push back gently but firmly in relation to some of the issues, some of the suggestions that have been made, simply because it's not relevant or there's a diminishing return issue, you are absolutely right. It's important for the Chief Executive and Graham and Brendan to have the backing of the Risk and Audit Committee and the elected representatives that sit on it to say, we've made a judgment call, because life's full of making judgments about risk and returns. So I just wonder, and this is very much an idea for discussion. Brendan, are we able to approve the annual report, but in relation to this report, ask you and Graham and Tanya, to the extent you want to get involved, Tanya, to go away and review the management's response in these three, against those three buckets. It may well be that we may need to have an extraordinary, maybe it's a phone call, the purpose of which is solely to get a sense, see if we can coalesce around a response that will give you and your staff certainty. Is everyone comfortable with that?
Yeah, I mean,
Did
it's,
we get them noted down, Toya, what the three buckets were?
I can.
For the first and the last, I just need to
Oh,
review
yeah.
the video on the second.
Yeah, my only thing is I'm not entirely sure nowadays, because I've been out of the game for a while, what the process is around 24-hour reporting. So once we sign off, they've got 24 hours to report to the OIG, and I believe that includes this information as well.
I think this will be gone.
Yeah, so within 24 hours of us signing off next Tuesday, this will be reported to the OIG as this.
Yeah, we don't have the luxury of keeping it as, that's my understanding
Okay,
too.
well,
as a draft.
Brendan, if that's the case, then my recommendation is that it's your annual report. And if this is part of your annual report.
Yeah.
And we are not yet satisfied that it's in a form that we are happy to have published, we shouldn't approve it. And we should wait until we are in a position where management's happy with the report. Because one of the things that I get a little peeved about is we hear a lot from the auditors about what the Office of the Auditor General wants. But last time I looked, the Office of the Auditor General is not paying the audit.
We are.
You are. So someone needs to think about the customer. So my suggestion, this is purely a suggestion, is that you and your team take some time to go through the management response, put it into those three buckets, or whatever, however many buckets you want to put it into. Recirculate this with the management response. The idea being that we'll have a Teams call, we can convene that pretty quickly, so that we can then approve the annual report and this as well.
maybe just check with the water too.
Yeah.
Because I can remember, in the good old days, sending that management response in the months.
Yeah, I'm not entirely sure it's part of the 24-hour report. I can't remember.
Would you mind checking?
Yeah.
So, could we, to help you, Brendan,
Yeah.
could we adopt the annual report? Subject to your confirmation that that would not involve approving this.
Yep.
Is that okay with everyone?
Yeah.
So in other words, if it does involve approving this, then we are not signing off the annual.
It would be a recommendation to the council for next Tuesday.
Sorry, I hadn't appreciated.
Yeah.
So you've got a council meeting on Tuesday.
Yes, we have.
Yeah.
And it's the 31st.
Yeah, the agenda's
It
going.
has to be adopted by the 31st to meet the statutory deadline.
Having said that, all that gets hurt if we don't is our pride.
And we get rid out.
And we get read out in Parliament, which, hey, any publicity is good. Money kidding.
Exactly.
But it would be nice to adopt it by the deadline this year, wouldn't it? Like last year we were so.
No, they extended it last year. To the end of the-
Yeah, they did.
Oh,
They did
yeah,
extend it.
they did this year.
Why don't we bring them in?
I think they read out the mayor's name and.
Yeah, that's right.
I mean, I could go give them a quick call. And see.
Why don't you see if he's there? So the chair's making a fuss.
I think we should adjourn them in.
Yeah, that would be
Thanks.
Yeah.
I just had one question on this.
Just,
It's still well be.
But just wait a minute,
Yeah.
because we're going off air and off the live stream.
We see a walk and make sure we see it.
Oh,
That's fine.
Don't mind if it's recorded, but it's probably tricky.
Okay, well, if you're happy then.
Yeah, it was in relation to the new accounting standard and the value of the Waikato Regional Airport shares.
Yes.
I can understand it in Brendan's report
All right, thanks, folks. Thanks for your patience. So following conversations, I propose that that the committee recommend to the Ōtorohanga District Council that it adopt 30 June 2023 annual report and sign the associated representation written. We should also note that having only recently received Deloitte's report to the committee, that the committee wants to take some time to consider the report and more specifically the draft management responses. And to that end, management will review their draft responses with a view to convening an extraordinary meeting of the committee to consider the responses and thereafter respond to Deloitte's at a time to be determined. That's the proposal. And the key thing here is that it's a recommendation of the council that it adopt the annual report, sign the associated representation. That's so seconded by Councillor Jeffries. Is everyone comfortable with that? Great, thank you, everyone. Thanks to the management team for their efforts. On that basis, I think we can declare the meeting closed. Thanks, Kaya.
Oh, sorry. Just waiting.